There are so many options when it comes to buying a car. Do you want to buy new, used, or possibly even lease?
Another option, you can keep the wheels you have, especially with interest rates at a 22-year high.
News 10 NBC's Deanna Dewberry explores your options in this morning's Consumer Alert.
My car is 14 years old, and right now Gertrude is running just fine. But you reach a point in the life of every car that the repairs cost more than a payment would cost, and it's time to bid your old girl farewell. Most analysts believe the Federal Reserve will lower rates by 1/4 of a point, but haven't counted out the possibility of 1/2 point. But our financial expert says if your car is still running just fine, you may benefit by waiting. After all, the Federal Reserve meets twice more before the end of the year. Right now, the average new car auto loan ranges from 5.6% to 14.8%. For used cars, it's higher, 7.6% to 21.5%. Jarrett Felton, a financial expert and CEO of Investment Wealth Management, says patience is indeed a virtue.
Holiday sales, a lot of banks will advertise possibly a reduction in interest rate if you decide to lend with them. Something that consumers may want to realize, more so than interest rate fluctuations, what they can control better, I should say, is what their own credit score is. Because if their own credit score is in the trash, they're going to get a terrible, terrible interest rate, regardless of what the Fed does with interest rates. I don't care.
Or what are some of the immediate things that you can do, first things you can do to improve that score?
You'd probably want to tackle the revolving, the amount of debt that you have accumulated compared to the overall limits that you have, because that makes up about 35% of your overall credit score.
So what Jared is talking about there is your credit utilization rate. That's the total amount of debt you owe across all your credit cards divided by all your available credit. So, for example, if you have $5,000 in debt and $10,000 in available credit, your utilization rate is 50%. You want a rate of 30% or lower. So Jared says, while you wait for the Fed to lower rates, you should take steps to improve your score. And that's your Consumer Alert.